Good evening, ladies and gentlemen. Welcome everyone for the 8th session of the Super 25 program, India's largest online stock traders conference. The topic of today's discussion is, friends, the options bank nifty multi-bagger strategy. We have yet another interesting speaker today, Mr. Geethanand Reddy, who is the co-founder of this company called AI Smart Solutions. He has been a professional stock trader for more than a decade now. He leverages the concepts of AI in his trading techniques. He has his proprietary tool called Alpha Hedge. Okay, so he is a man who has a mechanical thought, a systematic trader, a programmatic trader, an algo trader. He believes in the concepts of risk minimization. He never focuses too much on reward. He believes in risk mitigation, which eventually ensures that successful profitability. With this as an introduction, I would like to hand over the stage to Geethanand. And please be aware, many of you might already know him. Geethanand comes in various channels. He comes from the city of Hyderabad, and he comes in various Telugu TV channels to share his experiences about economy, markets, and so on. Thank you, Geethanand, for being with us today, and the stage is yours. Please carry on.
Yeah, thanks, Ashok, and good evening, all. Before proceeding, I'm thanking Ashok and the idea of Super 25. I really appreciate even Traders Gurukul team who is organizing it in a more professional way. I think this is the major online event in India. So conducting and dreaming this kind of sessions, so it is very, very, very appreciable. I appreciate you, Ashok, for this initiation and giving me such a nice opportunity.
Thank you, sir.
And I'm actually a option trader. Really, I focus most of the time on only one instrument called Bank Nifty because I like the volatility of the Bank Nifty and the momentum. Liquidity. Coming to the liquidity part now, we are having a huge liquidity in Bank Nifty after introduction of the weekly options. So it is more profitable instrument to trade. So that's why I choose Bank Nifty options as my basic trading instrument. So in general, I won't go or trade with any instrument. Even most of the strategies are tested and implemented on Bank Nifty. So coming to commodities and other aspects, I actually am not actually interested on that. So I have not even back tested it. So if you can understand these techniques and if you really like these techniques, please try to backtest on your own on other instruments before proceeding, and you can apply these techniques on Bank Nifty because I'm trading on my own, and so from the last 2.5 years, so these strategies which I'm going to demonstrate to you today are working fine. So that's about the instruments, and the session is purely on options trading, that two multi-bagger strategy. So how to bag a multi-bagger? See, few years back, there are so many multi-baggers in stocks. So every year, so many stocks are multiplying by 10x or 20x. Now, it is very rare case. So out of 2,500 or 3,000 stocks, you need to find one or two multi-bagger stocks. So getting the scanning for that opportunity and investing in the particular stock is a tough thing. Coming to options, there is an opportunity every day. At least 100 to 200 options will be doubling in a day. So coming to Bank Nifty, nowadays the volatility is very high. Even in 2019, there are more number of days where either CE or P, call or put has been doubled. So I thought that investing in equities for multi-bagger is not that profitable nowadays. So I started playing with the options. The returns are, very, very interesting returns. So I started trading on options. So these option strategy will I'm going to explain you how to catch big moves in Bank Nifty. So yeah, Ashok.
Sir, please go ahead. Go ahead.
Yeah. So there is a standard disclaimer. So this session is for purely for educational purpose. Before implementing it, please take an advice from your financial advisors. And there is even there is even huge losses involved in financial market trading. That too, option trading is very risky if you are not aware of the option functionalities and how options is priced. So it may be a tough thing to implement. So please consider this as a educational session. So I'm a data scientist. I'm having 14 plus years of experience in analyzing data. At my starting stages, I worked in Cognizant Technologies. Then I started my own software company, and I'm an entrepreneur now. Then I was attracted to stock markets. Now, I'm a full-time trader also. So my software company, we leverage artificial intelligence to find the momentum of the stock prices and directions, and even how to mitigate the risk. So our strategies are mostly driven by risk management techniques only. So on an average, on a weekly expiry, my bank, if I ask my system what is the perfect position to take, it will check 405 crore combinations to generate a decision. So 405 crore combinations, it will search and give me in 3 seconds. Out of 3 seconds, it will give me the result. It always looks to minimize the risk and maximize the profit. That was the main motto of that product called Alpha Hedge. So it is our proprietary product. We are actually using it only on our own funds. So I have, I did so many TV shows on financial markets, and researching on trading system is my hobby. So now I'm going to explain a positional trading strategy. See, I told you that I am leveraging the power of AI. Now I'm not going to introduce you the how actually the AI systems is built, or what are the patterns we are finding. So I'm not going to talk about the artificial intelligence and all. I'm going to give you the output. So what exactly the pattern it has identified, and I converted into some conditions. So based on that conditions, you can trade, or even you can write your own code on your AMA broker or any MetaStock or any other charting platforms. So they are very simply rule-based. Rule-based means everything, even your entry, exit, everything is a rule-based. You can even apply it in algo trading platforms. So it is useful. So I'm going to explain you today two strategies. One is positional trading strategy. So multi-bagger opportunity in options is actually occurs in two types. One is intraday. So I prefer expiry day to trade for multi-bagger options, and second is a positional trading strategy. So today I'm going to explain these two strategies: how to catch a golden hour momentum on the expiry day, and the second thing is positional trading strategy: how to hold a call, when to hold a call for a certain period, and when to book a profit. So I'm going to discuss all these things. This is purely rule-based trading systems. So my basic idea for this multi-bagger option strategy is it is very useful for positional traders and new entrants. So if you are a working person, you can deploy this strategy, and for a certain period of time, 4 or 5 days, you will be holding the call. So it is not a 8 hours, 6 hours or 7 hours job. It is not a full-time intraday kind of job. So it is suitable for every trader. I'm not going to use any indicators, or even if you don't have charts also, it is okay. You can even generate a signal through Excel. If you have a charting platform, then it's okay. With your NACDAS, you can find out that patterns. So it is a daily 15-minute job. That too, evening from 15:15 to 15:30. If you are available, if you can access the market, that's enough. So simply you can use this strategy. So it is a very simple strategy, but it is a multi-bagger option strategy. That's why the returns will be very interesting returns. So idea behind this strategy is, so for every strategy there will be an idea. So the idea is weak hands weekends exit happens before every big move. So my pure idea on this is, if any market momentum, so if there is any big market momentum, before that they will trap all traders. So it will look like a bull trap or bearish trap. So so many weekends will exit at that moment. So we need to find a these kind of patterns where they are trapping. So trapping is a common pattern before a big move. Short covering will be more aggressive than long build-up. So this is another idea included in the same strategy. Generally, when if market falls for 5 or 6 days, on the 7th day, if the market starts rising, that will be a big move. There will be a big intraday move. So that short covering for 4 or 5 days, it will be giving you a 3% or 4% move from the bottom. That's what we are trying to catch. Reversal trading will be very profitable. Most of the times we will talk about buy on dip, sell on rise. So what is a buy on dip? If the market is falling for continuously 4 or 5 days, we will start buying. That is a dip. If it is in a bullish mode, we will try to buy the stock. If sell and rise mode means the market continues for 4 or 5 days rising, then we will start sell that rise, short that rise. So that reversal trading is a very, very profitable thing. So if you are waiting for a breakout, most of the momentum will be gone by the time when you identify that it is a breakout. So that's why I prefer this reversal trading method. So,
Sir, one small request from the audience. They are requesting you to go a bit slow. We have enough time. So slow. If you go a bit slow, they would be happy.
okay. Ashok. See,
Thank you.
look at this chart. What happened? So the market, this is a daily candle. Market started falling 1, 2, 3, 4. Almost there is a big downside move. So here, if any trader look at this chart, they will say that there is a slight bearish movement in the market. Still, we are expecting to cross as a level to buy that stock. So they will think like that. But what happens means in this kind of trapping pattern. So I will explain you a trapping pattern. After this trapping pattern, the market will reverse and move very sharply. So this is the candle which you have seen here. So this last two candles, we observe these last two candles. What happened? Market rallied for 5 days continuously. So we are going to buy on this red candle day. So this is the day where we are going to buy. After following a fall or after rise, so we are going to buy at this moment when the market, when everyone is thinking that it is a bearish moment, then we start buying that stock or buying that index. So I will actually look for this opportunity. Whenever that opportunity comes, I will try to execute an order and I will hold it for 5 days actually. So what is the pattern? How I actually try to identify, I will explain. So before going to the detail, to the pattern, my idea is, see, I'm buying a call. So what is the maximum risk involved in buying a call? So I'm not writing anything here. So the maximum risk is the premium you paid. The premium you paid. So what is the maximum reward? Maximum loss, it is maximum reward. What is your maximum reward? So you have a unlimited potential theoretically, but you will get a good money if the market moves in your favor. So here the risk is minimum. So comparative, so whatever you paid the premium, that will be your loss. So if you bought a call option for 50 rupees or 100 rupees, that will be your risk. So for a lot means 20 into 100, 2000 rupees you are going to lose. So if it favors you 2000 or 3000 points, then you will be earning a huge amount. So the risk is capped. So the call option chart looks like this paper. If you go for a payoff diagram, it will be look like this. So the risk is limited and the reward is unlimited. So that's why I like to go with a naked buy or only naked buy. I'm not going to play any bull call spreads or any other option spreads. So naked buy. So this option strategy is for only to buy a naked call. Especially I'm saying I'm not going to play with puts. I'm going to buy only calls.